KPMG's China Asia Pacific chairman for consumer markets, Debnam, joins us now from Countdown live from Hong Kong. Hello, Nick. China, we are told, is slowing down. So can demand for these luxury goods, and notably Prada's goods today, remain at these levels?
Well, it's interesting because last time we had a global slowdown, China didn't really feel it until later, and I think we're going through something similar now. For the clients that I work with in the luxury space, they're not actually worried right now, but there's a little bit of hesitancy about what happens as you go through 2012 because at the moment, demand is fine. Growth may not be as high as last year, but it's still growth. And compared to the rest of the world of luxury, China's still a bright spot.
The top brands are European, and notably in China, the top brands are Italian brands. Why do the Chinese have such a focus on these products from Europe?
Very interesting question. We did a study last year and we asked the Chinese about country of origin and which countries they prefer. And there are some obvious things like the Swiss watch industry is very high. Everyone knows watches come from Switzerland. Italy and France both did very well, which is very good for Europe. And I think the reason why is because the European brands have done a very good job in addressing the market and addressing the market fairly early on. So you have people like LV and Gucci who've been in China for a long time and have great brand recognition. I think some of the other brands have been slower off the blocks.
As markets mature and costs increase, how will luxury companies deal with that? Well, the margins in a luxury company don't really give a problem with costs increasing because, generally speaking, the type of margins you can get at this end of the market will allow you or buffer you from those cost increases. And again, interestingly, in China, price is an issue, but it's not the biggest issue. And in fact, for many of the Chinese consumers, the more expensive something is, the more desirable it becomes. So you might want to buy the most expensive thing, but at the cheapest price, if that kind of makes sense to you. Yes, indeed it does. I mean, China has a larger proportion of young millionaires compared to Western counterparts. Do luxury companies need new strategies to target those younger consumers? Or actually, is what you're saying, hey, the higher the price, the higher the demand, bizarrely?
It's not quite so simple. And I would say for the very wealthy Chinese people, they are actually very well educated. And for the young guys coming through, and you mentioned how young they are, these guys are very tech savvy, they travel around the world, they're very worldly people. I think the big opportunity for the luxury companies isn't actually those billionaires in China, it's more the emerging middle class. And in China there's a great desire for luxury, right down to the people who are just coming into more money right now. So if you look at the market, it isn't actually the billionaires who are driving the growth, it's the emerging middle class, I would say.
Debnam, Asia Pacific Chairman for Consumer Markets for KPMG China. I'm grateful to you. Thanks for joining us live from Hong Kong.